Morning, everybody. Today is Friday, February 27th. Last trading day of the month. Last economic data coming out for the week. GDP month over month, 0.2% up, 1% expected. That's from Canada. That's Canada, rather. PPI month over month, 0.8% versus 0.3% month over month, and 0.5%. That was core PPI, and the PPI is 0.5% over 3%. So we'll see what that does to the market. Last trading day of the month. I'm sure that'll give everybody a breather. This is a very difficult trading month. If you're new to the channel, subscribe to the channel. Hit that bell over there for future notifications for videos. Hit that thumbs up button for and like this video. Go down in the description. Join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern Time. Let's get into broader markets here. Big sell-off yesterday right from the get-go, and we started on the ES right off of those January 22nd highs at 69.69. You could see it respected that right out of the box there, and it was a big sell-off. Didn't even look back, and we are still selling off as we speak right now. And so I would say that I am not thinking any longs today unless you get above. You got a lot of work to do to get some longs. I think there's still some flushing out that needs to be done. So I think today the trade strategy is you're looking for pop and fades. So you're looking for levels for the market to pull push back into and then possibly take a fade, or have it flush and then looking for levels where you potentially would take a long. I would say that down here, you may think about possibly taking a long at this 68.14.5. It's January of this year's monthly low, as actually coincides with September's 2025's high. So that's some confluence there of good price level there. If you lose that level, I think you're going to come down to this lower end regressional trend line at 67.89.58. That is a regressional trend line that drew from January 28th. If you lose that line, that level in the sand right there, 67.71.5 is a December monthly low from last year. And then below that, you have February's monthly low, 67.51.5. Below that, then I think you can get some accelerated downside to 68.84.5. And then below that, I think then you'd find that support level at 66.39.25, which is August of 2025's high. On the upside again, in order for us to get some upside, you're going to have to regain, I would say, in order for me to be really comfortable getting upside, you're going to have to regain this upper end regressional trend line here at 69.09.90. I don't really see that in the cards today, unless, however, some sort of tweet happens regarding geopolitical policy. Who knows? We are well aware of how a tweet from the president can make the market move, pretty rapidly one direction or the other. So be on your toes. It is Friday. Don't ruin your weekend here. There are plenty of other trading days left in the year. So hopefully we close out this February and then we can get into March, April, and May, where there potentially could be some upside into the marketplace. This is all healthy, by the way, healthy pullbacks. You don't want the market to go straight up. You need to have some pullback in here to create some liquidity here. So not horrible right now. So let's get over to the SPY. Again, if you're new to the channel, hit that bell to subscribe and get future notification, and hit that thumbs up button, like this video. Same thing on the SPY. We're below the 20-day SMA. We're below yesterday's close. The 20-day SMA is 688.08. Yesterday's close, 689.30. No thought of taking any longs unless you regain those levels at all. Same concept. Any kind of pop and fades, you're looking for levels to take a short into. A good short would be maybe yesterday's low rather. At yesterday's low, 684.35. So if you get a pop into that, and if you are trading the SPY, 684.35, you want to pop and fade that down to the downside. I do, however, you are coming into the 100-day SMA. that you have to be careful about. And then you have this lower end regressional trend line that I have here from June of 2025 that's been giving us some decent support, sitting, I would say about 682. Actually, let's call it, I would say 681.44. Then if you lose those levels, I think you, actually, I don't really like that 681.71 level there. Get rid of that. If you lose 100-day SMA and this lower end regressional trend line, I think you come into this February 13th low at 677.52, and then below that support down there at February's monthly low at 675.79. Below that, I think you come into December's monthly low of the December of 2025 monthly low, sitting at 671.20. Below that, then there's the next line of support, which is probably a better level of support, which would be 667.34, which is September of 2025 monthly high. All right, let's get over and look at the NASDAQ. Again, if you're new to the channel, subscribe to the channel by hitting that thumbs up button, by liking this video, also hitting that bell for future notifications on videos that I make. Let's take a look at the NASDAQ. All these charts are going to be very similar. We're below all these moving averages, below the 20, below the 50. 50 sitting way up at 25,445.82. The 20 this morning when it opens up, it's going to be sitting at 25,090 and change. Below yesterday's close, sitting at 25,024 and a quarter. Also below January's monthly low at 25,000 and a quarter. And we are also below February 13th's high at 24,995 and a half. And it's still falling right now. So I would say, again, same strategy for today. You want to look for pop and fades. I would say your first level, you want to be looking for a pop and fade, maybe in yesterday, pop into yesterday's low. Yesterday's low was 24,861.75. So you could think about that. The market seems to be falling pretty heavily right now with no buyers stepping up yet. Or you could be waiting for the market to kind of just really flush out and then look for your level to get long. You may lose a lot of these levels that I have here from February, 24,752. If you lose that level, you come down to February 16th low, 24,670.75. And then below that, you come to a weekly low from November of last year, November 24th of 2025, 24,616.75. And below that, you have a weekly low of from February of this year, sitting at 24,581.31. Below that, I think that's going to be your line in the sand at 24,495, and that is August of 2025's monthly high. So I think that that's a way to play it. Also, if you want to be patient, or just get in and take your shorts, and then know where your stop levels are going to be. If you get a little pop right now, maybe you take your short with your stop, maybe above this 24,887.75. Or if you get an aggressive pop today, maybe take your short up here. This would be the ideal short if you can get this pop up into this area, into this 24,000, call it 970 level. That would be an ideal short also. And then just kind of ride this down. But we are at the end of the month, so you have to be careful about that. And, it's a good flushing out period that's happening right now, because, one thing to keep in mind is that when you have these straight down periods like this, when you have the straight selling like this, it creates a speed zone for when the markets turn around and come back up, right? Just like, look at what happened here on Wednesday. Markets went straight up. And I said that, you had to hold this, otherwise you're going to give all that back from the previous day. And sure enough, what happened? This created a speed zone, and we quickly gave that back up. Well, this is going to happen. The same thing, what happened here. This now created a speed zone here. So what I mean by that is a lot of the longs they said to themselves, oh no, we're wrong. Obviously I'm making up a story here. It's just a thesis. They're wrong. And now they have to cover their longs. And then you also have a lot of covering in here with new position shorts. So then what happens is the market comes back up. You have coverings along with new positions going long. So that's how it creates a nice speed zone. So it's not buyers and sellers creating a nice little stepping stone. It's just a one straight shot one way up, one straight shot down. So that's considered a speed zone. It's not buyers, sellers, creating nice support levels, right? So that's why this year has been been extremely difficult, very choppy, very wicky. We're looking at a 15-minute chart right now, so especially in the NASDAQ. So hopefully the Mag 7 is done getting beaten on right now, and then we can get back to some decent, if you are a NASDAQ trader, which Tesla is involved with, and that's what I trade. So hopefully we can get back to some normalcy there. If you're new to the channel, subscribe to the channel, hit that thumbs up button. Please like this video. We have the Qs, same thing on the Qs. Mirror image of the NASDAQ here. Below the 50-day SMA, or excuse me, the 20-day SMA. 20 days is going to be sitting at 610.12. So if you get a pop, I would say if you get a pop today in the morning, probably in the monthly low here at 607.5 would be a good level to take a short. You could possibly take a short into that 606.48, anywhere in this level. I would probably look to take a short there, or if you get above that level, I would look to take a short in yesterday's close, and then take it all the way down. We are losing February 17th high, sitting at 603.95, and then we're definitely approaching the 628, which is December's monthly low. If you lose that, you come down to February 13th low, 596.46, and then below that you have February's monthly low sitting at 594.76. I usually like to make the monthly lows a little thicker line, so it gives me a little more. The monthly lows have a little more meaning than a daily low or a weekly low. So you have more, there's going to be more reaction on a monthly low, more reaction on a monthly low versus a weekly low, more reaction on a weekly low versus a daily low. So that's, pretty much how I draw my levels here. So we also have, if you do lose that February monthly low, you're going to come down to this 590.36, which is October of 2025 monthly low also. So hopefully we don't get that kind of sell-off today, and the bleeding stops at some point, so we can start heading our way back up and start making new highs again. So let's get into Tesla now. Again, if you're new to the channel, please subscribe to the channel, hit that thumbs up button, and like this video. Tesla, same thing as everything else yesterday. Tesla had a big spike on the open yesterday. Came up, hit this high from February 18th at 416.90, and then we still are respecting this line in the sand, 414.5, which is an all-time high that was sitting up there previously from November 2021, before the new all-time highs were created last year. And that has been a major level there that we are keeping up there, because it seems to be reacting off of that level. So we had major sell-offs yesterday. And then I thought, we would come down and get to these point of control levels that I have open. One most recently this week at 395.28. It's very possible we could be headed that direction today. So that's one thing I'm paying attention to on the downside here. We are losing it right now. So I think the line in the sand right now today is yesterday's low. That is what you want to pay attention to. If you lose this low and stay below it, I think we move down to the 400 area into that weekly low, 451. And then if we lose that 451, I think you're going to test this low down at 399.18, which is February 4th low. And if you lose that, it would come down to this regressional trend line I have here from January 5th. January 5th of 23 that I drew. And this is a mid-line regressional trend line. And then if we lose that, then I think we touch our point of control that was created this week on February 23rd right here. You could see that point of control level right there. We are headed that direction. So I do like that. So my same thing on Tesla today, which with most stocks, I'm looking for pop and fades. So I'm looking for levels to get short today. And then, that this is all probability trades, right? So nothing is 100%. So when I take my trades, if you come into the trade room, you'll see that I talk about, when I get into my trade, I say, okay, or you could take a trade here, you could take your trade at 407.29, and my stop is going to be at 408.53. So I'm always calling out my stop first, not where I'm going to take my profit. So you're always talking about your risk first. So that being said, let's go and talk about the 5-minute opening range trade. So yesterday, the 5-minute opening range trade was another beautiful trade again. And so you could see on this green chart here that this is automatically drawn on my charts here. It's a script that I have drawn. So yesterday's range was 410.92 for the low, 416.81 for the high. It was choppy for most of the morning, and then it started giving us our direction at about 9:10, and we finally broke that 9:10 low. And if you got in on that, if you bought the puts or if you sold short, however you use your mechanism, you could have gotten yourself. How far did we get down here? We got down to about 403. Could have gotten yourself about $7 out of that trade yesterday. So it's a pretty simple guideline as far as the direction you want to take your trade, and then everything else is about entries and your stops, and it gets a little more complicated than that on additional trades after the original break. So when you have that original break, when I first started this trade, sometimes I was taking this trade right here on the first break. And then I realized that you're not going to, most of the time you get a big snapback unless you can get that big follow through push to really show you that, yeah, you're breaking this level, and then you're going down, you're going lower for the rest of the day there. And now you want to look for your entries to get short, right? So there's different entries you can do it. So you have to have patience when you're making this trade. However, this helps you identify the direction that you want to take your trade for the day. So as far as what I'm going to have on my board today, when you go in the trade room, this is what I have on my screen. I have this is one of my trading charts here. So up here on the top, I have my calls. So if I think the market's going up, I buy a call. If I think the market's going down, I buy my puts, right? So on the right square here, right chart, this is a 5-minute chart, and up here is a 2-minute chart. I have other screens as well, but this is pretty much all you really need to look at the market. But all my other charts are kind of glance charts here. So what I'm going to start with today, I have today's expiration date. I've got 405 calls, and then I've also have the 405 puts. I'm going to probably change this this morning to start out on the put side because we are getting some downside. I'm going to change it to 400, even though we closed. You see this premium price closed at 98 cents. Because we're getting downside right now, and we are approaching that 400 level, this will probably open up in the $2 range level. And as we get closer to the 400 level, this will probably get us up to that $3 range. I'm going to see how the market opens up. I may change this to 405. I also, on a different screen, I'm going to see how the market's trading that. On a different screen, I have Monday's expiration date. So if I don't like the way it's trading, I'm going to have Monday's expiration 410 calls. You can see where they closed yesterday at 440, and then the 400 puts, and you can see they closed at $2.18. I expect these to open up probably in the $4 range now, based on where we're going to open. But I'm going to see how the market's trading, and the reason why I'm going to have Monday's expiration possibly is just to give me a little more breathing room, so it's not going to be so volatile today, because what happens on an expiration day is the theta. Anybody that's trading options understands that theta represents the time decay. So for every movement on the stock price, if you get these big flash moves, the premium price is going to fluctuate very rapidly, and it makes it very difficult to trade. So I'm going to watch and see how the premium prices are moving on the open, and I may just probably switch to Monday's expiration date right off the bat, so it slows down the premium prices fluctuation. So anyways, that's pretty much it for today. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video, and go down in the description, join our Discord community, and come in and watch the free trading. Today's going to be the last day for free trading. We're going to figure out how we're going to go from here as far as a minimal charge that we're going to charge in the Discord community. But come on and join our community, as it's organically growing. It's a good thing to see out there. So I enjoy doing it. So I hope I can see you in there. If I don't see you in there, tune in for my market ahead review on Sunday. And if I don't see you there, I will see you on Monday morning for the pre-market analysis. Have a safe trading day. Don't mess up your weekend, and have a great weekend. Talk to you soon.